Hey guys, welcome back to the channel, the Framework Fortune YouTube channel. If you're new to the channel, hit the like button and subscribe. There will be more videos coming on day trading and how to fix your credit and other ways to get your financial freedom. This video today is going to be about the 4 criteria we look for in a stock. So if the stock does not meet these 4 criteria, then we are not trading it. So those 4 criteria are low float, high volume or unusual volume, price range of 50 cents to $10, and some type of news or catalyst. Some good reason to trade it. So first things first, let's talk about the float. So the float is the number of shares offered to the public. So companies are made up of shares, and not all the shares are available to purchase to the public. So the ones that are available to purchase, that is called the float. So those are the shares that I can buy, you can buy, your neighbor can buy, your grandma can buy, whoever can buy them. Well, we want stocks that are low floats, so under 20 million shares. Now, Thinkorswim doesn't have a way really, or at least I'm not aware of, to show the float, but it does show the shares of the company. So normally, it's like CTRM, for instance, it says 2.4 million shares. The float's probably around like 2.2 million. It's usually pretty close to what the shares are on Thinkorswim. So that's all we really need to see. If you do want to find the accurate float, the actual float, you can go to Yahoo Finance, type in the ticker symbol. So say you just type in Yahoo Finance CTRM. And then a little ways down the page, you would hit statistics and you would go down until you saw the float, and it would show you the float. So that's an easy way to find the float. But like I said, on Thinkorswim, the shares are usually close to the float, so that's just what I use. Now, to explain the float, that is the number of shares, like I said, that is available, so you want to think of it as supply. So simple supply and demand. If you have low supply, so low float, low shares, and high demand, the price of the stock is going to move up. So I'll give you an example. If you had 10 Super Mario Brother games left in the world, there's only 10 of them. They're Nintendo games. All of them have stopped working, whatever, but there's only 10 working ones left, and they're on eBay. And you have 5,000 people trying to buy those 10 games, then the price of those 10 games is going to go up. So you look at shares as those Super Mario games, or the float, the shares as the Super Mario games. The less, then the more that it can move. So that's why we look for under 20 million. So then we'll talk about the volume. And volume is the eBay bidders bidding on the Super Mario games. Volume is the number of shares traded during a period of time. So, and then a period of time is daily. So we want high volume. We want a lot of shares being traded. We want a lot of eBay bidders buying our video games to make that price go up. So you have the low float with the higher unusual volume. Then you're going to have price movements. So, for example, CTRM, 2.4 million shares, over 6 million in volume right here. I'll close back so you can see. See, it's 6.6 million in volume. And it moved from $5 to $10 this morning. That's a big price movement. So, simple supply and demand, low float, low shares. High volume, high buyers, a lot of buying, the price goes up. Simple enough. So the other criteria we're looking for is between 50 cents and $10. And the reason being, is because most day traders, especially newer ones, they don't have $25,000 laying around to invest in a trade account. So you're not going to be buying very high priced stocks. And because most traders will be trading in this 50 cent to $10 range, that means you're going to have more volume. And the reason for all this is, say you have $1,000. You buy 200 shares of CTRM at 500 or at $5, I'm sorry, and it moves up to $10 on that 200 shares. That's $5 times 200. That's $1,000. So on your $1,000, you made $1,000. Whereas if you was to buy a stock like Apple, like Apple, it's $178 a share right now, and you only got $1,000. I mean, you can only buy 5 shares. So to make 1,000 on 5 shares, this would have to move $200, which is not probably going to happen in one day, or even a month or 6 months. So go back to CTRM, $1,000 you buy 200 shares, $5 move, you make $1,000. If you have $1 stock, say like Shipt, it's only $1. You have $1,000 to trade with. You buy 1,000 shares of it. It moves 17 cents. Then you made $170. If it moves all the way up to $2, then you made $1,000. So this price range is a lot easier to double your money and have these bigger gains than it is anywhere else. Like I said, if you've got a $25,000 account, sure, you can trade some higher price stocks, but the more shares you can buy of lower price stocks, the more money you're going to make. So on CTRM, if you had $20,000 and you saw a $20 stock and you wanted to buy 1,000 shares of it, yeah, you might can make $1,000, $2,000, something like that on that $20 stock. But with CTRM, if you buy 4,000 shares at $20,000 total, and it moves $5, well, $5 times 4,000 is $20,000. So on your $20,000, you've doubled your money and made another $20,000. So this is the easiest way to grow smaller accounts. So that's why we want that price range of 50 cents to $10. And then the last criteria is a catalyst, some reason to trade that stock. It needs a good reason. So let's look here. Today, they reported revenues for the first 6 months. That went away. Up 20%. Net income up by 170%. Everything's up. Happy. They're excited. They're making money. So that gets the traders excited. So that's a catalyst. We got the low float, the high volume. So the supply and demand is there. The reason for it to be there, that press release, good press release, and it's in that price range. So you see this stock met all 4 criteria and it moved $5 today. That's a big movement. Now, another thing the stock has going on for it is if you look at the yearly chart or the 6-month chart, this stock has went on some massive moves before. So you can see here from $5 to $19, from $4.85 to $10.81. Looks like a gap up to $18. Right here it moved from $5 to $9. So that's another thing. Traders see that. They're like, oh, this is a money maker. This is a stock that's going to move and I'm going to make some big money on. So that's another reason. So this stock had 2 catalysts, really. It had a very good press release, and it had a good indicators on the chart that this thing will make some massive moves. So that gets people excited. So when we meet all 4 of those criteria, you're going to get these big moves and you can make big money. And this doesn't happen all the time, but it happens quite a bit. And even if you're not making $5 moves, you'll still find stocks like this that'll move $1 or 50 cents where you can consistently make profits on. So let's go over some other stocks and see if they meet our criteria. So let's look at IO. 14 million shares, so that's definitely under the 20 million. It's around 884, so it's in the price range. It's a little bit higher than normal, but it's still under $10, so that's fine. And let's look at the press release. And so there's not really a press release on it today. It's a press release yesterday. I don't know. I guess that's kind of good. They completed development. So if investors think that the development of whatever they developed is good, then it being completed would be a good catalyst. And so let's look at the volume. 286,000. That's not a lot of volume. So this might fall in the category of unusual volume. So when we're looking for high volume or unusual volume would be if a stock only gets like 500 shares of volume a day. Okay? And then all of a sudden it's got like 100,000, 150,000, 200,000 volume. Then that would be kind of unusual for that stock. So you get these price movements. And I don't know for sure what its average volume is. Now it looks like it has a lot of volume according to the volume bars, but I don't really know for sure. I'm just going to assume that since it's only had 200,000 shares and it's moved from $7.50 to almost $9, that 200,000 is unusual volume for it. So this stock did meet all of our criteria. And as you can see, it went on a nice run, $7.50 to $9. And actually, if it breaks $9 here, it could go on even more run. It could go up to $10. This is a simple U-shaped pattern. And I'll go into patterns later, but a lot of times we're looking for U's on these daily charts, on these 1-minute charts and 5-minute charts. But anyway, like I said, this meets the criteria. So let's look at another one. So here's SHIP. 2.8 million shares. That's good. 500,000 volume. Not great, but maybe it's high volume for this stock or unusual volume. But we have no press release. So what is the reasoning to trade this stock? It is in our price range. It's only around $1. So why would we trade this stock? What's a good reason? If there's no press release, we look at this yearly chart pattern or 6-month chart pattern and see if there's any reason why traders would be trading it without a press release. And I don't see much. The only thing I can see is that there is this big space. This is called a gap between these prices. So there's nothing here to keep this stock from moving from down here when it breaks $2 to move all the way up to $3. So maybe it's that. Maybe it's that. And then this 9MA it's been under it for a while. You can see it's wrote under this, and this will be in the support and resistance videos, but just for the reasoning purposes, it's been under this, and when a stock breaks above a resistance line, it can move up. So this is not the strongest chart pattern. I probably wouldn't try to trade this right now. When it comes around and gets up to this $2 mark, maybe in a couple weeks or something, that would be a good reason. And if it had a press release, that would be a better reason. But to play this stock today it wouldn't be a good enough reason to me to try to trade it. Now it did move a little bit. It went from $1 to $1.17, so there was profit to make there. But you want the predictability, and it does have 3 of the 4 criteria with like a maybe good reason. So it'd be a little gambly, uh, but you still could have made profit if there just wasn't nothing else going on. So let's look at another one. And this is the last example we'll do. SOLY, 14 million shares. So it's got the low float. See the press release. Significant discovery of acoustic subcision for treatment of cellulite. So I don't know really what all that means. They discovered something that was significant to them in their treatment of cellulite. So if investors think that's a good thing, usually significant discoveries can be good things, then you have a catalyst. You have a reason to trade it. So that's there. We do have a reason. Let's look a little closer at this chart here. In this 5 minute. So let's see. Let's move this out of the way so I can see. So I mean, it's moved a little bit today from $16.70, looks like, almost to $20. So that's a pretty good move. But it's out of our price range. It does have the low float, does have a catalyst, does have unusual or high volume, but like I said, it's out of that price range. Now, if you had 20 grand to buy 1,000 shares, sure, you could have made, 2 or 3 grand on this trade. But if you've got 20 grand in your account to use and you get in on CTRM, same thing. Instead of just 2 or 3 grand, you make 20 grand. So that's why we want that price range. So if the stocks don't meet those 4 criteria, then we don't want to trade them.